All right, legends, the price of Bitcoin is coming very close to a zone which will incredibly increase the probabilities for the bulls to break above $85,000. Now, of course, there is still a chance for the bears, which I will explain in this episode. Throughout the last few days, we've been leaning on the side that all of this does look very corrective. Yesterday, we were talking about this $81,000 range to get that bounce. We front-run major levels of support that I would have liked the price to get hit, okay, and see that proof of support, that fake out, either beneath the daily or the weekly, and we ended up front-running that level and bouncing a few $1,000s in the last 24 hours. Now today, we're going to be talking about the different movements that could happen throughout the next coming hours. Today is a very important day. We do have the Fed press conference. We do have interest rate decision. I'll be going live on YouTube. Make sure to subscribe throughout this hour, guys, to check the volatility and the movements to find some trading opportunities. Now, yes, legends, we are going to go through the different probabilities on the 1 hourly time frame, but most importantly, throughout the end of this episode, focusing on the 5-minute chart to see the different possible movements that could happen in the next coming hours to see if we're going to increase the probabilities for the bulls or increase the probabilities for the bears, guys. Remember that you do get an incredible deposit bonus here on Weeks. If you do deposit $1,000, you'll be getting $500. If you deposit $2,000, you'll be getting $1,000. $1,000 is your max cap. You also get 25% fee reduction on your trades when you sign up with the second link down below in the description, guys. Take advantage of Weeks. Anybody that is interested in trading, you could also sign up just with an email and a password and start trading Bitcoin and many other altcoins, guys. Check out the second link for those bonuses. Let's dive in here through the 1 hourly time frame and let's keep it incredibly simple. The last few days, we've been talking about this potential bullish case scenario, a WXY formation, because we were having multiple 3-wave formations throughout this range. And because we did hit here the 0.88 Fibonacci right over here with this wick, we were leaning on the chance that the price will manage to get above $85,000 at some point in the next coming days. And all of this looks like a very complex corrective structure. Now we are leaning on a WXY right over here. Now we can see this one does not look too symmetrical. It doesn't really matter if you take it from here or from here. It is still a valid count. Of course, with the timing, it's much better here. We form a flat right over here, but overall, it doesn't really matter. At the end of the day, we are looking at this WXY, and for the price to move to the upside on the higher time frame, right, where you actually formed a 1 wave, a second wave, another 1 wave over here, and a second wave right over here. And we are looking to break out potentially in a third wave to get to $86,000, $88,000 potentially today, guys. Let's see what happens today with the news. Of course, it could be incredibly bearish and we get a dump, or incredibly bullish and we do actually start pumping very aggressively. So this is what we're looking at here on the higher time frame on the bullish case scenario. Now, another possibility that could be forming here is a contracting move. I don't think that this is likely going to happen, but we would have to kind of create a wick and a double top scenario from those highs created here from last Friday. It is still possible, but this 5th wave needs to be smaller than this wave right over here, because this already is becoming the 3rd wave, 4th wave, and a 5th wave. And for the moment, the 3rd wave is smaller than your 1st wave, meaning that if we do get the length of the 3rd wave right over here, and we put it from the low to the possible high, you would really not want to exceed the $86,400. So you're kind of looking for a swing failure pattern. Of course, this scenario could be ending up bullish in the end, where you get a corrective move, you form a higher low, and then you rocket to the upside. If you do exceed the $86,400, then what we are looking at here potentially is a double 1-2. And if we do manage to get above $86,400 successfully, I would expect the price to actually continue to the upside to 88K or 90K zone. Now, Most importantly, what is the bearish case scenario? Well, the bearish case scenario is looking at this. We have two possibilities here, all right? This has been a corrective structure in a three-wave move. We've been discussing this throughout last week, played out very, very nicely. It's different levels that we were talking about, and we can see how it's a three-wave structure, preferably in a WXY, because it has been very choppy, very three-wavy over here. And now we are forming lower highs from this high that was created on Friday, last Friday, okay? So there is lower highs forming here. So it could be a three-wave corrective structure. However, the only two bearish case scenarios from this lower high that was formed throughout Friday, right? And then this next one here on Sunday, we can see either an expanding move or a contracting move to the downside, okay? This is the only way we can look for the bearish case scenario. We should be rejecting here round about the $84,000 range. The moment we get above 84,200, 300, then it's not going to be looking too good for the bears, and it does increase the probabilities to take out $85,000 and break above it, of course. Now, as you can see on the chart here, we come into a very close zone of invalidation, either for the contracting move or even for the expanding move. You cannot overlap this pivot high right over here. Even hitting the 0.88 Fibonacci for me would be a clear sign that the bears are absolutely losing control here. And of course, yeah, we could reject and get a pullback, but I would be very interested in looking for long positions. If we do form a three-wave structure here in a corrective move, then I would be looking for the next leg to the upside to test $85,000. However, the bears still have a chance to test yesterday's lows based on this scenario. Either a contracting move down or an expanding move is also very possible. Most importantly, let's zoom in here on the 5-minute time frame and understand the bullish case scenario, which is looking pretty damn good if you do ask me, right? When we do take a look at the lows formed yesterday, we did manage to form a higher low right over here. Then we got another leg to the upside, potentially forming a double 1-2 setup. Then we get the largest move up, which would be your third wave here, as you can see, your fourth wave right over here, and now you are in your fifth wave. Potentially the price is going to top out somewhere in this region before hitting $84,000 and get a kind of a corrective structure. Now, this is the question. Can we manage to form a corrective move here? The levels of invalidation would be the golden pocket taken from this pivot low to the pivot high that is created somewhere in this area. We do not know until we do start correcting very nicely throughout the next coming hours, either impulsively, which will be looking quite bearish, of course. There are some levels of invalidation. But if you do start moving very three-wavy, very slowly here to the downside, the big major levels of support that need to hold for the price to get a bounce and form your fifth wave here, what we're looking at here is a 1, 2, 3, 4, 5, is the 382 Fibonacci and the 50% Fibonacci. This is 82,400 to 82,700. It really depends on where this high is created, either 83.7, 83.8, right? We don't know. The high is still not in. We're still grinding to the upside. We need that corrective move to analyze very carefully. And of course, the 382 to the 50% Fibonacci taken from this pivot low right over here to the pivot high that is created once we start seeing some pretty decent movements down. We really need to watch out the 382 and 50% Fibonacci where we could get that bounce to form the next wave to the upside. Now, if the price action starts correcting down very aggressively in a three-wave move and we do just blast through the 382 and the 50% Fibonacci and we manage to hit the golden pocket, this is going to increase the probability for the bears, okay? And any bounce after this will very likely be a corrective structure and we'll be seeing the price action continuing to the downside. So the golden pocket from this pivot low to the pivot high, wherever it is created, is going to be the invalidation for the bulls, and what we'll be seeing here is the price coming down very likely to hit the lows of yesterday at the $81,000 range. So invalidation would be golden pocket. That will increase the probabilities for the bears to actually still continue to roll down to the downside. And if we do move down very slowly in a three-wave structure, the 382 and 50% Fibonacci from this low to whatever high is created in this zone, preferably below $84,000, is going to be the crucial levels where the price should maintain as support for the bullish case scenario. Of course, we would be expecting a corrective structure after the fifth wave and then possibly get the next leg up to hit $85,000 plus. If the price continues to the upside and we do hit the 0.88 Fibonacci from this pivot high created on Monday to the pivot low created yesterday, Tuesday, it will incredibly increase the probability that what we're looking at here is bullish impulse to the upside, and anything that happens here will likely be corrective, and we are finally going to get that leg to the upside to break $85,000. So 84,200, 84,300 will increase massively the probability for the bulls, despite any correction or whatever happens here, that we are going to be taking out $85,000 plus, guys. Make sure to pay attention to these levels, subscribe to the channel, because we'll be going live later on with the Fed press conference and interest rate decision. Thank you very much for joining, and I'll see you later on the live stream.